going on, everybody? Welcome into the Thursday, January 9th, 2025 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. First up, Chevron targets $6 to $8 billion in free cash flow growth by 2026. Newsflash, it ain't building wind farms, I'll tell you that much. Next up, salt typhoon stirs panic in Washington. Biden had to change his depends. Unbelievable. We'll then jump overseas. Hungary blames Ukraine for rising gas prices in EU. Europe then reacts to Trump's threat to buy Greenland. This one is absolutely hilarious. We'll jump back into the U.S. Alaska sues Biden administration over oil and gas drilling leases in the Arctic refuge, otherwise known as ANWR. Stu will then toss it over to me. I will quickly cover what happened in the oil and gas markets, mainly covering what was sort of a pretty precipitous drop in prices relative to where sentiment has been. EIA came out and posted a smaller than expected, but still a draw in crude oil inventories. And then, guys, I keep telling you about these midstream transactions. We saw another one today. We will cover all that and a bag of chips, guys. As always, I'm Michael Tanner, joined by Stuart Turley. Where do you want to begin?
Hey, let's start with one of my favorite topics, free cash flow. Chevron targets $6 to $8 billion in free cash flow. Growth by 2026 is well positioned. Chevron Corporation, and they are a United States corporation, is well positioned to grow its free cash flow. Chevron CEO Michael Wirth announced on Wednesday they are America's second largest in oil and gas, and they expect to achieve these results thanks to the new start or expanded oil production in Kazakhstan, growth in U.S. shale, and offshore U.S. Gulf of Mexico. Pretty impressive.
Yeah, very impressive. I mean, obviously Chevron is hoping to pick up Hess, and I think a lot of what they're hoping for in that growth is closing this Hess deal, which is still in arbitration, as we know. If you need to go check out the deal spotlight, where me and Barrett covered all that we'll know somewhere in Q3 whether or not they actually are able to acquire Hess. Obviously, the prized possession from Hess is their 30% stake in the Guyana field, so it'll be very interesting, and it's part of the reason why they went ahead and did that. That's, again, where most of the growth is going to come from. We did see a quote from John Hess, who's the CEO and chairman over there, saying we are, quote, confident that a merger is going to happen and we're getting prepared for that. But if you ask Exxon, they'll tell you, well, we wrote the deal. We know what the intent was. But intent and legal are different, so it'll be very interesting. But who knows, Stu? Obviously, Chevron isn't going out and building wind farms.
No, that would be their counterparts in the EU and the UK.
It would be. All right, what's next? Let's cover these salt typhoons.
Salt typhoon stirs panic in Washington. This article is really about China's hacking threat, but yet nobody is really talking about China's hacking threat to the United States grid, Michael. This is really frightening. The full extent of Beijing's success is not yet public, but there's been steady coverage about the number of affected providers and the extent of the breaches since the reports about a severe salt typhoon cyber attack last September. Here's part of the problem. The telephone companies and the telephony companies, the telephony equipment that is in there is Chinese, is susceptible to hacking. The Biden administration put back in all of the Chinese equipment that is controlled remotely by the Chinese after the balloons attached to it. That's why this is energy security at its finest, waiting to happen. Holy smokes, Batman. President Trump, if you're listening to this podcast, get that Chinese crap out of the grid.
Yeah, I mean, I doubt he's listening, but if he is, yes, that's great advice. It would be great advice. This is crazy. These government hacks that are coming from China signal clearly they want war. And what that does to energy prices is anybody's guess. Because we've seen the back and forth sanctioning of U.S. oil and Chinese oil companies. So What does that actually do? Who knows?
Yeah, it's just a mess. And when you have the cables being cut in the last few days around Taiwan, then you have all the other things. There's just way too much. That's why this article was important. That's why I picked it for today. Let's go to Hungary. The blame game. You cannot buy this kind of entertainment. Hungary blames Ukraine for rising prices in the EU. Hungarian Foreign Minister Peter, I'm going to butcher his last name. Holy smokes. This is Selaju blamed rising natural gas prices. Almost sound like Scooby or Shaggy. I'm not sure which. Gas prices in the EU, which he described as artificially reduced supply. You have to remember that it is Ukraine did not sign the extension. Russia was willing to sign the extension. And here's where it gets dicey, Michael. This brings out to the point that if Putin actually had that contract, he would be more interested in stopping the Ukraine war because there would be cash flow in there. Now that there's not cash flow in there, President Trump, all he has for deal making is the stolen Russian assets. All of this is not talked into this article. So President Trump is what I thought he would be coming into a stronger ability to negotiate a settlement immediately has now turned into Putin is better off just ignoring the West and moving all of his gas supply to China and Asia. So this story has got some hidden nuggets in it that most people won't catch. So let's go to the next one here. Europe reacts to Trump's threat to Greenland. You can't buy the head popping around the world. Borders must not be but moved by force, a spokesperson for the German government said on Wednesday. Coming from the Blitzkrieg government, there is no question the EU's letting other nations in the world, who they ever may be, attack its sovereign borders. Danish Prime Minister Mette Frederiksen urged caution Tuesday night. As a very close ally of the United States, I think there's reason to welcome the growing American interest, but it must be done in a way that respects the Greenlandic people, she told Danish media. I think the Danish folks, the Greenlandic people are excited. I think that they would definitely be all in. And when you take a look at the geostrategic importance of Greenland, I'm all in because it would stop the strip mining that the Chinese are already doing. So I'm in.
Yeah, it is weird to think about that. You know, we're obviously not going to take military force to Greenland. No. To say that's going to happen, it's disingenuous. Now, would we put pressure on Greenland to possibly vote to get out of Denmark's control and come to the U.S.? Maybe. I think the issue is Greenland wants to become an independent nation regardless. Now, the real question is, do they have enough revenue? I mean, do they have enough of an economy to do that? With all of their natural minerals, the answer is yes. It's part of the reason why, again, the United States wants it. They want all that money. Let's, again, come back to it. It's all about money. You know, it's not about, we'd love to have the Greenlandic people as part of it. We can give a hoot about those people. It's about the money.
Let's take a little bit of a walk in history here for a second. The Panama Canal. The Panama was actually owned by Colombia in that area down in there. It was a different country, and we wanted the canal. So what did we do? We started a government. We forced a voluntarily new government of Panama, and we interfered in there until we got our Panama. And when we got the new government, we got the canal. So we have done that in the past.
Yeah, no, absolutely. So it'll be very interesting to see. All right, let's move to Anwar. What's going on in Alaska?
Oh, this one. I'm telling you right now, hats off to Alaska for suing the Biden administration over the oil and gas drilling leases in the Arctic refuge. We have got to stand up to these policies, and it has to come from the leaders of oil and gas companies are now suing and stopping woke things. It's now got to come from the state governors as well, too. This is a quote. The Interior continued irrational opposition under the Biden administration to responsible energy development in the Arctic continues on America of a path of energy dependence instead of utilizing the vast resources we have made available. This brings up a huge issue that the Biden administration has done, and that the lawfare, even though you had said on your podcast when you did your individual one that it was, oh, well, it might or may not. The fact is it's going to take years to undo all of the travesty that the Biden administration has done, because the lawsuits are horrific. We have over 200 judges by Biden and Obama that are still in there that are holding a lot of this crap up. So it's going to be painful. Hats off to the Alaskan government for doing that.
No, they're standing up for their people. I mean, they're the only state that actually does receive an oil and gas distribution directly to their citizens. So they do love their oil and gas up there, and there's a responsible way to develop ANWR. There is. And we do that better than anybody else on the planet. Yep, absolutely. All right, guys, let's go ahead and cover finances real quick. But before we do that, we've got to pay the bills. As always, thank you for checking us out on the world's greatest website, www.energynewsbeat.com, the best place for all your energy and oil and gas news. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit the description below for all links to the timestamps, links to the articles. Give us a follow on Substack, guys. Best place to support the show. It's been a long day, folks.
Don't talk like Stu.
But truly, it's the best place to support us. If you do, we just dropped a paid subscriber only article, our infamous Mines Mineral Model that I've been a part of now and been teasing for a few days. It is live on Substack. You get the abstract and the first paragraph for free. Otherwise, you're going to need to subscribe as a member to be able to see it. It's an awesome article, really covering where and how much minerals we actually need to pull off these energy transition scenarios. Spoiler alert, it's a lot. And then we'll be following it up next week with a paper specifically taking that Mines Mineral Model and saying, okay, if we apply a traditional capital asset pricing model on top of that, are there some investment insights that we can gain from this? Highly recommend checking that out, again, via Substack. You can also subscribe to us, and please do that on YouTube and leave us a comment on Spotify if you are listening. And I know it's the new year, but it's never too early, guys, to think about 2025 taxes and think about 2025 cash flow. So if you guys are interested and want to start planning your 2025 right, do it by investing in oil and gas. Become Billy Bob Thornton from Landman. Get yourself some working interest. Go to investinenergy.energynewsbeat.com. Our project and the project we're helping with filling up fast, guys. So if you want to get in before we end up closing it, go ahead and email us or go to that link, and we will get you all the info you need. Let's jump over those, Stu, and just top line indices here. S&P 500 basically flat, up 1/10 of a percentage point. NASDAQ basically flat, 2 and 10-year yields flat. Dollar index up about 1/3 of a percent. Bitcoin dropped another 2%, 94,760. Crude oil was down about basically a full dollar, down to 73.32. That's a 1.5% drop. Brent oil was down a little less, about 0.7 of a percentage point, down to 76.25. Natural gas jumps 5 percentage points, all the way up to $3.65. Our XOP contract, which is an EFT designed to map all of our exploration and production public companies, that was up about 0.6 of a percentage point, 137.67. Really what we saw with prices was a disconnect between what the API crude oil inventory guesstimate was yesterday. They were predicting about a 4 million barrel draw. What we saw today was about a 1.2 million barrel draw. So that's mainly where a lot of the drawdown comes from. Was we were expecting a much bigger draw, and it never ended up working out that way. We also did see a build in fuel oil and distillates, which is good as we move into the winter months, but it definitely doesn't help prices. We did see as well, this is a quote by BMI analysts, we are holding our forecast for Brent crude to average 76 in 2025, which is down from an average of 80 in 2024. This bearish view is being led by our fundamental data forecast, which points to an oversupply this year, with supply growth outstripping demand by 485,000 barrels per day. All that is courtesy BMI analysts and our friend of the show, Irina Slav. So thank you very much over there. We can go ahead and just throw up the crude oil inventory sheet. As you can see, we are down a full 1.2 million barrels. Some other interesting stuff. We did see, if we look here, we did see distillate fuel oil up 6.1 million barrels. So that's where a lot of that comes from. Domestic production ended up at 13.6 million or 13.5 million barrels per day, which is pretty unbelievable. Lower 48 checked in at 13.1 million barrels. Finally, guys, I've been telling you about this midstream stuff. EnCap, Flatrock, Midstream competes 2 transactions with Plains All American. They announced today that they have 2 separate agreements to sell Ironwood Midstream, Energy Partners 2, otherwise known as Ironwood 2, and all EFM, which is EnCap, Flatrock, Midstream, owned and outstanding Plains Series A preferred units to Plains All American LP for $800 million in cash money. These are expected to close in the first quarter of 2025. Again, if you guys aren't getting the picture, these midstream companies are selling to the larger conglomerates because the larger conglomerates can buy them at, what would be theoretically higher valuations. They can integrate them with their infrastructure, lower their operating costs, and still make money on a higher valuation. Whereas the PE-backed companies say, this is the highest valuation we think we're going to get in the next 3 to 5 years. We need to sell and achieve some liquidity. So I'm not saying I was right, but I also kind of am. So again, I would watch out for more of these. I think we're going to see a few more.
When are you running
in
for
the
office?
first quarter of 25? What's up? You tell me how smart I am?
Yeah, when are you running for office?
Trust me, I am the last person you want running for office. I'm barely qualified enough to host this podcast, but we appreciate everybody who listens. Last show of the week, Stu. Any over the weekend predictions? We'll have our weekly recap which drops Saturday, Friday. Is any podcast coming out on Friday?
Yes, we've got several. We've got a George McMillan coming out. We also have a David Blackman coming out, and we have next week Mark K. He is the Mark K. show coming out, and we have I have 3 people that are primarying other Republicans lined up, and we are rolling. Like we have Duncan Alexander, and we have a few others that are starting to roll through. So if you are a America First and you are taking on a Republican and you are going after anybody and you're starting your primary campaign, I want to talk to you because I want to know about your energy policies, and we want to start helping spread the word for folks.
Yep, absolutely, guys. So with that, we will let you get out of here. Start your day right. We appreciate you always checking us out here. We will see you on Saturday for our weekly recap, and then we'll be back in the chair on Monday to break it all down, guys. But we'll let you get out of here. For Stuart Turley, I'm Michael Tanner. We'll see you Saturday.